Hello, Maverick traders. Welcome out to your market roundup for May 10th, 2022. Corey here with you. As always, a quick reminder to make sure you follow your trading plan. And let's get to it. So, there's plenty to talk about in the markets. 2022 has not lacked for suspense and excitement and volatility. And we're having a record decline in bonds. Stocks are down. Crypto's getting hammered. High growth tech names are down 80 and 90%, which kind of speaks to trend trading in general. When you get some of those high volatility trends going, they can just go and go and go. And you don't want to be stepping out in front of that speeding bus. You just kind of want to go with the flow and go with the momentum. So we'll talk more about, Cathie Wood and the growth stocks. But as we look at the markets today, kind of a bounce back day. We bounced off of the lows. Advancers versus decliners was about even. You can see that we're in a deep bear market. I mean, 88% of stocks are below their 50-day moving average. We're in a downward trending market. No no debating that point. As far as the market's concerned, a little bit of a recovery in the most beaten down names. So if you look at the pocket of green, it's that tech names and high growth tech. That's really where we bounce back. So, Cathie Wood and the Ark stocks kind of formed a little bit of a hammer candle, came off of the lows. The bear market is vicious and it will probably persist, but we might see a little bit of a bounce back. So let's make sense of this together. If we look at this ARC chart, and this is just kind of represents high growth and volatility names, notice that just for the first time in a while, we've bounced off of the lows. Hammer-like candle, kind of similar to here, where you just saw a bounce for a couple of days. Kind of similar to back here, where you bounce for a couple of days. That's all it really suggests is, look, buyers are putting up a little bit of a fight. They're just stepping in and a little bit of buying in place, right? A little bit better market environment than we've seen in some time. If you're in the high growth names on the short side, probably makes sense to maybe take a little bit off the table, lock in a profit or two. You don't have to get completely out, but take some money off the table. That makes sense. But as I look at the other markets, other than that high flying group, the others don't really have, yeah, I mean, we came off the lows, okay, similar type of dynamic, but not as far stretched and more recent breakdown. I mean, we just broke support after a good consolidation and spending a couple of months sideways. Last week, I don't always get things, picturesque, but last week we talked about the Fed meeting and that this would be another kind of cup and handle, inverse cup and handle type of pattern. And boy, did it ever play out just perfectly. Now, it was more volatile than I would have expected, no question. Okay, I didn't expect to be up 4% and down the next day 6% or what have you. But it really played out as we expected. And the point I really emphasized last week is, look, we're probably going to bounce on the Fed day. Okay, a lot of this is priced in. There will be a little bit of a, buy the rumor, sell the news, so to speak. It's priced in. People know the rate hikes are coming. People know that the Fed has been hawkish and so on. They're probably just going to be a little bit of a relief bounce. But here's the important point. Like we said, we're in a bear market. We're in a bearish trend. So you use those rallies to take off anything you have bullish and add more bears and just continue to trade in that direction. And even though we might bounce for a couple of days, that's all I would expect it to be. I'm not ready to call this the bottom or something. And as we bounce, where do we come up to? Well, probably around this 410 level. Now remember, support and resistance is not so rigid. It's not like, plywood or cement. You kind of come up and squish into levels. So we'll probably come up and kind of squish into this old support, new resistance, but ultimately I would suspect a reversal, another leg down here in the S&P. As we look at the NASDAQ, it's a little worse. It's more of like the ARC stocks. Maybe we'll get a bounce. Maybe we'll see a little bit of a recovery here for a couple of days, but that's about it. And sometimes these are really disappointing. It would not shock me if we kind of expect about, and all it can do, all it can muster is just like a day or two of choppy sideways action, and then you get further declines. Right now, the next risk to the markets is mass liquidations, basically margin calls, forced liquidations, heavy selling, because a lot of traders out there are leveraged up. There are probably some people on the wrong side of this trade, and it's going to push to their breaking points. So I think that's the next phase. Watch for an exhaustion, watch for a massive decline on heavy, heavy volume, and then it makes sense to really lock in profits on the bearish side. As we look at the heat map, like we talked about, I mean, tech is just the one that bounced back best. It's kind of like a rubber band. It was stretched the most to the downside. It had a little bit bigger bounce today, but I don't put a lot behind this. I don't say, well, this is it, and that was the low, and away we go. We'll see. I think you'd know more about that after seeing how it tries to bounce and so forth. Right now, I would lean towards not expecting much. As we look at the weekly outlook, the monthly outlook, we did come off of the lows. We did kind of bounce and form a little bit of a hammer-like candle. So maybe a little bit more upside. I'd give it kind of a 0 for a couple of days. I'm fine with that. But here's the important part. Overall, the trend seems destined for lower prices, big picture. So would I still, continue to look to add bears and be a little bit more focused on that side? I would, from a trading perspective. Now, as we look at potential ideas, we've got kind of a full list here, some bulls, some neutrals, some bears. Let's talk about them. Couple of surprises maybe mixed in here. I'm going to start with Hasbro. Notice bearish to bullish reversal, 20 above the 50. It's one of the only stocks that's making, a new high over the past couple of months, and we've kind of sunk back into support. So this is a pretty easy thesis. Either we hold here or we don't, right? If we don't bounce right here, then it's a non-starter. If we kind of stabilize and start to pivot to the upside, it's a bull pullback and a possible new uptrend starting to emerge in HAS, in Hasbro. LPX, again, relative strength. Look at the downward trend that was broken on heavy volume and big expanded range candle. See the upticks there. That's picturesque. We have a nice little pullback here. Should work our way higher back up there towards $80-ish per share. Really like that LPX chart and trade idea. Oxy. Now, this company reports earnings after the bell. You may or may not already be in. I'm already in. This is a potential, black eye. Maybe the stock's trading down right now while you're watching this recording. I don't know. But I still expect it to work its way up into the 70s and beyond. I think it's highly, highly leveraged to oil prices. And if you saw anything about their fundamentals, their earnings went up, hundreds of percent. Their revenues increased hundreds of percent year over year, and oil prices have gone up since then. So they should be somewhat printing money. And in this market environment, if you think about outpacing inflation, companies basically need to be able to raise prices on consumers. And a lot of these energy companies can do that and need to do that and so on. And it's just a great environment for them. And sometimes when you look at what the political landscape is going after, they go after success to a certain extent, right? For years past, they were really going after large cap tech and saying we need to break them up. And look at how good Apple and Amazon and Google traded during those years. Now they're going to come after energy because they're energy successful. And to a large extent, politicians, they know it will be popular to go after success. So they're going to go after energy companies. But it kind of tells you where you should be looking on the trading and investing side, because these companies are, for lack of a better term, they're kind of printing money. On the neutral side, Peloton has been a disaster. I actually traded it for a neutral trade somewhere back in here. Where was it? Big gap down. I don't even know where it was. I think it was this day. Okay, I traded it to be stable here for a period of time and it actually gapped up, which was fine. I did a bull put spread. I would do the same type of approach where it's just like, it's not going to flatline, right? It's going to bounce, it's going to sell up. But my guess is you fast forward a few weeks and it's going to be right around this 1290-ish type of level. So could be a candidate for an iron condor, some sort of sideways trade. Pretty decent risk to reward on that. Roku, same thing. I would play this a little bit more sideways. Back here, you can kind of see an exhaustion low, and we went sideways. I think we're still in that mode. I think this is not going to have a ton of upside, a ton of downside. So I like a lot of these Cathie Wood type stocks for sideways trades. The higher the volatility, the better. I didn't highlight Roblox because it's reporting earnings, but post earnings, I'd probably go back to that one for a sideways trade. Now, on the bearish side of things, we've highlighted this already. Maybe you're in. If you're not already in, we highlighted this kind of inverse cup and handle. If you didn't take the bearish trade previously, watch for a little bounce. I don't think it'll get all the way back up there, but on bounces, I still think this thing has lower prices and probably a push below 100 to kind of flush people out on the downside. Additionally, Twitter, this doesn't look like a bearish candidate, but here's the thing about Twitter. It's in a buyout, and Elon Musk is taking it private, and they're going to buy it out, and the buyout price is up here and so on. So theoretically, this should just go sideways for many months. I think there's quite a bit of risk to this deal falling apart. That Elon Musk may not really want Twitter, may not want to go through this whole headache and hassle. I don't know. This might be a game to him to a certain extent. And I'm just not sure that this is going to go through as expected. I heard some ramblings today that he may try to get Twitter to go, to sell to him at a lower price and so on. And I think some of those scenarios are pretty bad for Twitter. And the risk to reward for some bear spreads were pretty interesting. Like I was looking at a 45-40 put spread a couple of months out, and it was going for less than $1. Like you could pay 90 cents risk for 410 of reward, betting that some sort of deal falls apart. And I think that's kind of closer to 50-50 that the deal falls apart. And if it does, we could be down to 40 in a heartbeat. So, 410 of reward, 90 cents at risk, obviously a greater than 4-to-1 reward to risk ratio. I don't know, it's obviously not high probability, but some of those spreads kind of looked interesting to me. And then Sunrun, we've highlighted this one. Perhaps you got short in kind of the handle area. If not, I still think there's probably another push to the downside below this support level. So, I was highlighting it around 24. It actually spiked above that on earnings, kind of sunk back in. But ultimately, I suspect we're heading down there into the teens, 18, 17, 16 even, probably seeing some of those numbers in the not too distant future. Now, tomorrow, inflation, I'll bet you it's peaked, and we already see that in the projections, but we get more data on that front tomorrow. CPI comes out. Expectations are for a 0.2% month-over-month increase. Now, why is that significant? Well, last year at the same time, we saw an increase of 1.2%, or last month, I should say, we saw an increase of 1.2%. So, 0.2, you can see that inflation's backing up. You can see it in quite a bit of the data. Now, here's the problem for the markets. It's going from 8% maybe down to 7 and 6 and 5, which is still way too high. So we've just got some problems to work through, and there just seems to be kind of a lack of bullish catalyst to get this market moving higher. Earnings reports, you've got Coinbase reporting after the bell today, Disney reports, Occidental, Toyota, Alibaba. There's plenty of reports there to kind of keep you entertained. Hope you've enjoyed this market roundup. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.